Ladies and gentlemen, welcome back to the channel. Tesla stock today came under a little bit of pressure, nothing we can't handle, and I believe we are well on our way to breaking into the 500s. Okay, here in today's episode, I'll explain why that is, why I believe this, the upcoming catalyst for this market and for Tesla stock, and I will also share with you a clip from CNBC and Dan Ives where he says the AI revolution is entering its next phase, which I think is highly going to benefit Tesla into next year. Do me a quick favor, ladies and gentlemen, hit that like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode if you guys want to come join the trading community. Now, first things first, I will say today just seemed like a little bit of a give back from yesterday. Yesterday we had a really strong risk on rally, and today, even though we had good economic data, even though we didn't have any surprises or really any bad news, you did give back some of the rally from yesterday. Now, I know there's some retail investors that think a stock even like Tesla that's very high quality, in the right fields at the right time, about to have what I believe will be a really good 2026. You want to see the stock be green every single day, up 5 to 10%, and that's just not the reality of the situation. But I do believe a Santa Claus rally has begun, has already started, and this will lead us well into the 500s by the end of this year. Okay, we're not talking next year. By the end of this year, I think Tesla stock has probably around $100 move from here through December 31st. Now, we do have some big catalysts upcoming for this broader market that's potentially going to really help broaden this market. You could see the S&P sitting pretty near all-time highs. And, well, not a lot of stocks have actually participated in that. Tesla has been one of them, okay? Tesla has been one of the stocks that has done a little bit better, right? Tesla's got a lot going for itself. But I do think even then you're going to see a broader market rally into the end of this year. And I do believe the setup for next year looks really good with the consumer, getting stronger, AI adoption alive and well, investment continuing, and adoption increasing. We get a new Fed chair in May. We're going to get a couple of rate cuts next year, likely inflation that continues to make progress. Again, consumer getting stronger with big, beautiful bill, no tax on tips, no tax on overtime. Real estate begins to pick up. There's not a lot to be scared about next year. Trade certainty. We're not going to have more uncertainty around trade versus 2025. Like, things look to be going in the right direction, okay? And 2026 might be a really damn good year economically speaking and for the markets. But right now, it's about markets recovering, right? You're in this tactical trade, and even then, tactical like Santa Claus rallies are typically not just straight up green every day. Although we've had some really good days, we had a really good week for Tesla. Tesla's broke out above critical levels. There are going to be these days where markets just kind of relax a little bit. And I'm not surprised it is today, heading into a weekend and heading into the Fed meeting coming next week. Now, that's the big catalyst in the very near term. You're basically guaranteed to get a rate cut at this point. It's about an 85% chance of a rate cut. The Fed historically always does what the markets price in. There's going to be Fed officials that dissent. There's going to be some Fed officials that don't want to cut rates. Like, that is going to be a thing. But, the question is, what happens to January and March and April's Fed meetings? Do we start to price in cuts at any of those Fed meetings? And technically, right now, you're pricing in the next Fed cut after December 10th, the April 29th Fed meeting. Yeah, April 29th Fed meeting, 40.3% chance of a cut, 36.4% chance of a pause. Now, the Fed's not going to tell you a whole lot next week. Let me burst people's bubbles, okay? On paper, the Fed should not lean in either direction too much at the next meeting, okay? They might say, like, the bar is a little higher to cut rates again, things we already know. But the reason for this is because we get all of your basically government shutdown data on December 16th. Okay, so that's when we're going to know more about the economy, know more about inflation, and whether or not the Fed would look to cut rates again anytime soon. Now, the good news is markets are only pricing in another rate cut in April. So if the economy is weaker than expected or inflation comes down more than expected, I think there's room to pull forward that rate cut to maybe January if the economy sucks. I don't think you want that. I don't think you want a cut in January, as crazy as that sounds. In March, though, I think you could very soon, December 16th or so, start to price in a cut for March. And that would be likely a good situation, especially if the cut is fueled because inflation comes down. Now, on Monday, you have consumer inflation expectations. You have a 3-month bond auction, some other smaller bond auctions, but that's it. Tuesday, you have JOLTS job openings for October and September. You also have the ADP employment change weekly, and you have the NFIB business optimism index. So that's going to be a critical set of data, especially JOLTS job openings, because we have not gotten them in quite a while. And October was during the government shutdown, so that's going to be big. Now, Wednesday of next week is when you get the Fed interest rate decision and the economic projection. So you're going to get a new Fed dot plot. The Fed's basically going to tell you where they think the federal funds rate is going to be by the end of next year. Markets are pricing in about 3 cuts. You're probably pretty well in line with that. Probably, 1 to 3 cuts is probably where, the Fed's going to come in. So I don't think you're going to get any big surprises there. Now, on Thursday, you get exports, imports, initial jobless claims, wholesale inventories, all of that. I think the markets are probably going to be responding to whatever the Fed says on Wednesday. And then on Friday, you don't have a whole lot, but Fed speakers come back. Fed Paulson, Fed Hammock, and Fed Goolsbee will be speaking throughout the morning on Friday. But by Friday, you're either going to be continuing this Santa Claus rally, or you're going to have coal in your stockings by this point. Now, I would expect that, again, we're not going to get any huge shockers, and that just the tactical rally in and of itself makes a lot of sense, right? Hedge funds and institutions are the most underweight stocks right now they have been in a very long time. They don't want to massively underperform the S&P heading into a new year. That just doesn't make a whole lot of sense. Okay, they want to at least meet the S&P's returns. So tactically speaking, it makes sense for a rally. Now, if you're looking ahead towards 2026, and specifically with Tesla, again, we already talked about kind of the bull case, right, for the broader markets. But for Tesla specifically, I mean, unsupervised FSD most likely coming next year. Optimus sales by the end of next year in the optimistic scenario. Robotaxi continuing to expand. Elon Musk, the CEO, and some real progress on AI being delivered. Tesla is one of those supreme opportunities right now where I don't think there's a lot of downside risk that is not already priced into the stock. But if Tesla excels here in AI, the upside is massive for Tesla stock. And I think tactically speaking, mix that with, the outlook for 2026, and you're in for quite an aggressive move here throughout the rest of December, in my personal opinion. Listen to what Dan Ives recently said on CNBC. He says the next stage of the AI revolution is just starting.
Trade Wedbush's Dan Ives joins us here on set. He just released his 2026 outlook, forecasting 20% upside for the tech sector next year. When we say tech sector, define it. All of the NASDAQ, Mag 7 names, what are you seeing?
I think big tech, if I think about like big tech in the AI trade, that's probably going to be up anywhere from 20 to 25%. But I think it's really the AI revolution stocks. What I view as sort of the winners, up 20% in a minimum. Look, it's my view, this is just starting the next stage of the AI revolution. I mean, all of our checks are showing, even in the last 3-4 weeks, about 20-25% of deals are actually accelerated from the hyperscalers. So that's why I view it from software to cybersecurity, the infrastructure. I continue to view it as, this is just the beginning of the monetization of the AI revolution.
What do you make of these deals, though, excuse me, that NVIDIA has been making in terms of investing in a partner which is basically a customer, because in this case, the deal is that Synopsys will use CUDA, and so we'll become a paying customer. So they're investing $2 billion in stock in order to gain this customer. At some point, do you question that, or is that all fine?
Look, I mean, as someone like myself that covered tech, late 90s vendor financing, so obviously, worries, is that a red flag? Look, I view it as this is an AI arms race in terms of everything that's playing out. So for NVIDIA, for OpenAI, for what we see AMD and others, like they're putting stakes in the ground. I view it as for every dollar they spend, they're getting back $8 to $10. Now, in the near term, there could be questions until it plays out. But I think we're going to look out 2, 3, 4 years at these deals. And that's how, like, NVIDIA, they're going to continue to be like, that's the one chip in the world that's fueling the AI revolution. And I don't see that slowing down. That's why I love everything Jensen's doing.
Were you surprised? I was. I'm curious that Synopsys didn't trade better today, understanding that stock went from 650 to 420 in a straight line. That announcement today, $80 billion company, $2 billion investment. I would have traded well. I thought it would have traded a lot better than it did today.
Yeah, look, I think, if you look at Oracle, the $100 dip ever since OpenAI, the view almost like good is bad. Like being associated in NVIDIA, OpenAI, is that like a too big to fail moment? But I think we're going to look out. Like, I'm surprised the stock didn't trade higher. I think there's something where I view that as more of an opportunity. Given my view, like that's one of those sort of second, third derivatives of this AI revolution trade into 26.
So, Dan, on the peripheral, so look at a Palantir. It's been a name that you've been bullish on. It's been hammered right after earnings. Is this one that you doubled down on, given the valuation, where it's just so outsized for everyone to actually look at it and think that they want to buy it even cheaper than it was, but it's not really substantially cheaper? Do you buy it here?
I mean, Steve, to me, you triple down. Because it's my view on Palantir. I get it's expensive today, but in the next 2-3 years, I think there's $1 trillion market cap because 20-30% of all the deal for the trillions of dollars being spent on the use cases, I mean, they're playing a different game in terms of any AI use case in the enterprise, Palantir's first call. So that's still not reflected in the stock, and I get it's super expensive and it's become sort of an emotional bull-bear debate. But I think this is a stock that, we've talked about 200, 225, 250 in terms of my view where it goes.
And I mean, just to circle back to Tesla, I mean, look at this chart. A break of the 50-day moving average coming up to retest your recent highs with the tactical setup that we have into year end, Santa Claus rally, seasonally bullish period. With such a strong outlook for next year, it's hard to think Tesla does not end this year well into the 500s. Let me know your thoughts on that down below in the comment section. Hit the like button as well as subscribe to this channel if you have not done so already. Have a great rest of your day and a great weekend. I will see you in the next one.